As I record this video, the Standard & Poor's 500, the best gauge I think of the US stock market, has just reached an all-time high. And I received an interesting question, and the question is this: how can markets be at all-time highs when the world feels so uncertain? And it's a very good question. So in the last 5 years, we have had a pandemic, we have had war, we have had inflation, we've had a bear market, and we have had just general political chaos, both in the US and abroad. And yet, the stock market today is dramatically higher than it was just 5 years ago. How can that be the case? How do you deal with this uncertainty? Well, the simple answer is uncertainty is the rule and not the exception. When we're putting together a financial plan, there is very, very little that I can guarantee, but I can guarantee you one thing. There will be a time period in which markets will fall. That's the simple fact of life. I oftentimes tell folks in every 5-year period, there's going to be 1 year where you think that Brian and I are just the smartest folks in the room. We can do no wrong. Anything that you own keeps increasing. Then there's going to be 1 year where you want to throw a brick through our window because, oh my gosh, we've lost so much money. And then for the remaining 3 years, everything's going to be pretty much okay. And this is a trend that we have seen play out now for quite literally decades. And there is a misconception that this uncertainty equals risk, but that's really not true. History has shown us that risk doesn't come from the uncertainty itself, but it comes from how you react to uncertainty. And so this fear of a potential downturn is typically what leads to bad decisions. And that's things like exiting the market entirely, saying, hey, I just think it's overvalued. I don't like who's the president. I want to take all my chips off the table. I'm just going to sit in cash for a year and let things calm down. But what history has shown us is that new highs in the stock market more frequently just lead to more new highs rather than a market crash. And we are not looking to predict the future. That is a fool's errand. It is not something that can be done on any reliable basis. But the intention here is to build a financial plan and build an investment portfolio that is going to react predictably over a variety of different events. The intention is to weather whatever is going to come rather than try to gaze into our crystal ball and figure out what the future holds. This is my long way of saying, if you're feeling uncertain, particularly about the economy, particularly about markets, that's normal. But a well put together financial plan should help you ease some of that uncertainty. That, at its core, is what we're here to do.